Welcome back to the only hour in the market you need to make an egregious amount of money. I'm going to throw a quick shout out to those that were on the exclusive Friday stream, which is now moved to Discord only. I'll put the link at the bottom if you want to get in there. And Shao, we posted some tweets to get you access. 1,000% runner, 13 cents to $1.50. It means you turned $13 into 150. It was a hell of a time. As the market ripped today. Big win. I'm very excited. We got a really weird shakeout in the market today. Buyers came in at force. We are going to talk small cap picks. Another one of those from, again, that Friday stream, already up 4% today, running, doing well, performing. And I think small caps are going to have a little bit of an outperformance streak here, which we've broken down for you a few weeks in advance. We are going to obviously look at the names that you guys want to see, Tesla, NVIDIA, and the SPY. We're going to map out your two options trades for the week, both bullish and bearish, and then we're going to get into some more exclusive stuff that I can't wait to tell you about. Today was a weird day. It was a run, and then it was a rip, and then it was a dump, pump, then dump. We ran up and new high of 564.80, and then a low of 559.63 in after hours. What are you thinking about this today?
I mean, first off, IWM, small caps. This is not just a temporary bump. I really do think the repositioning is happening. This is the third straight day of clear outperformance on IWM than Qs and SPY. You're seeing, again, another flush towards the end of the day on SPY and QQQ, but IWM held strong. I don't love that we're ending not at the lows of the day on SPY and Qs back-to-back days, but like there's a clear rug pull that's happened towards the end of the day. I don't love that. But at the same time, like I kind of think I want those indices to consolidate, catch a breather, and allow this repositioning to continue in the small cap names. So that's why IWM is showing clear strength, up 2% today again. We called out, like, once it clears 210 and it holds 213, this will run maybe to 240 by the end of the year. And we're at 218 right now, and it's just falling through. Like, that's a rare characteristic of IWM. That's something we have not seen for all of 2024. If you guys remember, like, small caps caught a bid in November, December last year, but it was an immediate fade at January and really hasn't caught a bid until this past month. And now we're seeing new characteristics in the market. Again, history doesn't repeat, but it often rhymes. You can learn about prior cycles before where there's this much of a delta between large cap and small caps. Large caps lagged and small caps caught that like bid and that closed that delta between the two. And I think right now that's happening. So small caps is where the alpha is being had right now. And the appetite towards this alpha in an anemic trading month like July and like entering next month, like I think that's where the hotspot is. You're seeing it today again. I'm not trying to ring the alarm bells for big tech or SPY, but it's time for the small caps to shine. Let the breadth widen out and let small caps valuations start catching up to the large cap valuation, because that's what you want to extend the longevity of this bull market rally. So I think this is exactly what we want to see today. And I guess, do you want to start seeing some SPY charts right now, or should we talk elsewhere?
Yeah, I think let's get right into it with our options trades for the week. So we got two scenarios here. As always, we break down both the bullish and the bearish scenario and get this chart up here. We're going to put us on the side, move this over. We're going to break this down so that you guys make money both ways, as you always do. I just want to say Shaquille O'Neal, that is one of the best names I've ever seen. Cheers to you, my friend. So let's get this pulled up. We got the SPY here. We're looking at the 5-minute. We need to be on the 30-minute. There we go. So still continuing that uptrend. As you can see here, we got some very interesting price action, a little bit of flush sell program happening every time we hit those 560s, 3 times in a row now to count it. So that's something you should be wary of. However, we have held pretty consistently on our 21-day here, and so we want to trust that and trust the price action and what it's giving us rather than try to buck the trend. I will say we do have some divergence here with the RSI. We priced in a new high. However, RSI did not follow suit, meaning that the price action wasn't as strong as it usually is in situations where we see continuation. So what does that mean, and what are we going to do? Well, we have a few pretty clearly defined ranges here, in my opinion. And that would be north of 559, and then our new top, which I would call right at about 563. I think this is the channel that we're going to live in for a little while, and this is the channel that we want to trade. So I think looking in through this week, and just to recap, if you followed these levels, you should have made at least 100% on both the bullish and the bearish trade for almost 52 weeks in a row. So write these down, put them on your chart, do what you got to do so that when you're watching the SPY chart, you know what to do. I'm going to give you the exact options contract that I'm going to be trading when these levels are hit. So that way none of you are left out in the dark wondering what the hell you should be doing to make money trading options. So for the day, we have our SPY chart. Sorry, 1 second. All right. So let's take a look at it. So if we've got bottom 559, also confirmed with our 21 day right there, and we got our top at 563, we're going to first look at trading this bearish or bullish, bullish breakout if we get it, because I don't think that trading this range for $2 is worth anything. So I would just skim right by that and ignore it. There's really just one situation that matters, and that is us opening around 562 and change, and then testing this resistance right here with a confirmation breakout, meaning that the price breaks above it and then comes back down to touch it one time. And then basically imagine walking on ice. You want to make sure that it'll hold you. And then if we go from there, I think that we're going to see another strong $4 day. As you can see here, 561 to about 556. They're getting $4 or $5 moves on the SPY after that little bit of consolidation. So what I want to see is another one of those $4 to $5 moves. Now there's two ways we can get it. Option number one is opening strong and breaking out. But the more likely option, and the one that I like a little bit better, is this. If we get a weak open and we find support here, 560, meaning we touch that price point, our feet hold, and we can look up and see the sky above us, then we know that the bulls are going to hold on here and we're going to see more upside. And then we're going to take a very simple trade right to the top of this range, which gives you exposure to the upside if it continues, but it also gives you a nice clean channel to make money for the week. And that's our bullish scenario. So we're going to flip over here. I got to swap this over. Sorry, 1 second so you can see this. So we're going to pull up the SPY options chain here. We are going to go to trade SPY options. We're going to always shoot for at least ideally 2 to 3 weeks out. Which puts us on at an August 2nd expiration. That would be 8/2 of this year, about 18 days out. So as I just explained to you, looking at the ranges that we did on that chart, we would be looking for a support pickup 560, and then we would look for a $3 to $4 swing to the upside on the SPY. I would say that this 564 call would probably be where I would go. The price is going to be significantly diminished if we trade down to 560. So this would not be the price at the time. And this is also a little bit expensive because you've got such a strong delta here. The market's pricing in a little bit of an upside move. So that being said, when we get that dump down to 560 and on the 15-minute, we get that support and consolidation, meaning price touches down, holds, and then starts to pick back up, we are buying at the support test. And we are trading this for a nice 20 to 30% day trade. Or if the market continues, you can take anywhere from 50 to 100% on an overnight swing, as this could end up in the money. So that's our bullish scenario. That's scenario number one. We're going to now break down your bearish scenario, which is very similar, but we always want to make sure we have both sides of the trade lined up so nobody's caught off sides. Actually, I can get rid of this, make it smaller. There you go. So in our bearish scenario here, okay, we're going to get rid of these. We're seeing a very similar open. I'm going to make this red so it's easier to do. I don't see the whatever. So we open and we're going to probably bump our heads 562.5. And then we want to watch the test down here. So to me, I'm not initiating anything until I first see a break of this 560 support. And then I see a retest of that as resistance and rejection. So again, price comes down below 560, then tries to push back up, gets rejected at 560. That's when we have confirmation that puts are the move. And this is going to be, I think, an easy trade down to 555 or so. So we should see an easy $4 to $5 swing to the downside should that happen. You've got a nice consolidated support range here, which tells me that's where this will go. But the beauty of this is you have exposure. If it keeps ripping to the downside to 550, which is our next major price level, you're going to make stupid money on the way down. So what this trade does is it limits your risk. It gives you quality upside exposure in the sense of risk to reward. And then the third thing is it leaves you at the table for not unlimited, but extreme upside if it keeps playing in our favor. So we're going to flip this back here to the SPY options chain. We're going to flip this over to puts, and we're going to look at that 556 put, which is currently priced at $3.04. Market is pricing in the upside, in my opinion, and that's closer to the money, the one we're looking at. This is about $5 the downside. This would be an easy 100% runner should we get this move. So again, we test 560, we break below it. When we get rejected trying to climb back up, that's when we enter this position. We're going to ride it all the way down to about 556. It should be in the money, and this trade should yield an easy 30 to 50% return, in my opinion. Now, should it continue from there and go below 555 and a half, then this trade is poised for 100 to 150% move. So either way, you got significant risk reward on the table. It's a smart trade that's very calculated, and you can get it if you just follow along with these levels as I just broke them down for you. There, now you have it. You got it. It's ready. Take advantage of it. I know people that have only followed this stream and have made a couple $100 a week following just literally the SPY up and down options trades. Very simple. I'm sure there's some of them in this chat. If you're in there, hit this chat. Let us know if you've been taking these trades, because this is just easy money. The market's giving you free money. Our goal is to map it out so that you don't have to, and you can still capitalize on it even if you're not an expert. So that's what I'm looking at for the SPY, and that's kind of what I'm expecting here. So bada bing, bada boom. You want to go into some of this? You got a pretty big one you wanted to talk about, right?
Oh, you want to talk about Wiz and Google? All right. So some rare news that happened over the weekend, which news like this doesn't usually drop, was rumored acquisition. Let me restart that. Google is rumored to acquire Wiz, which is a cybersecurity startup, for $23 billion. If you guys don't know Wiz, this is a major deal if it goes through, if the speculation is a reality, if it goes through all the compliance and antitrust. This is a massive deal, not just because of the price tag, which would be the biggest price tag in the history of Google's acquisition history. It's because I do think this Wiz deal transforms Google's cloud security portfolio. If you guys don't remember, Mandiant was another name that Google acquired a couple years ago for like $6 billion. They acquired that specific tech company for, I think it was like 60 times the revenue. So clearly, high quality tech has a massive premium associated to it. Something that we've been preaching consistently, where I look for moats. I don't care about valuations as much. If a company has a clear moat and a necessary component of the modern tech stack, which is another word of enterprise 2.0 in the post-AI world, I'll pay up for it, just because I know it's absolutely rare to find those high quality those companies with a high quality tech product that can't be replicated. Wiz is in a really competitive field in cloud security. But the reason this was such a big deal, in my opinion, is the price tag. This $23 billion isn't just $23 billion. It's 60 times Wiz's ARR, which is the annual recurring revenue. It's another word for essentially revenue. So they're paying 60 times multiple, which is a nosebleed valuation. But this essentially puts a benchmark of what a cloud security company should be worth in the public market. CrowdStrike, for example, that's one of the companies I'm absolutely bullish on. As many of you are aware, cloud security is one of the 9 modules that CrowdStrike offers. The cloud security component has nearly identical ARR as Wiz. I think it's $500 million for CrowdStrike. So this cloud security module is like 15% of CrowdStrike's total revenue, for example. So you see it's growing rapidly at triple digits, but it's still only 15%. But let's just say we use the same multiple that Google is rumored to acquire Wiz at, which is 60 times ARR. If you apply that same multiple towards CrowdStrike's cloud security module, which is $500 million ARR, that brings it up to a $30 billion valuation just on 15% of CrowdStrike's business. That's why before the market opened, when I was on Spaces with Evan and Gob, like I called out these cybersecurity names were flat for some reason. I was like, this is a massive tailwind for a valuation perspective on the whole industry. And primarily, like CrowdStrike won't be red. A lot of people thought CrowdStrike would be red due to this noise because Microsoft is already in the space, but now add Google. Could there be a walled garden in cloud security? And a bigger player just came into the space. It's going to cannibalize the cloud security component of CrowdStrike's suite of offerings. I was like, that's not the case. I think it's bullish. It just essentially, I just called out 15% of their business is now worth $30 billion. Pre-market, they're worth $80 billion in the market cap. That essentially shows like, wow. So if they wanted to just sell this component, which it wouldn't, this component of the modules that they developed in-house, they didn't have to go acquire technology for it. They just developed in-house and instantly made $30 billion in valuation on that. That just shows the optionality and moat that CrowdStrike has on whatever the latest and greatest is in cybersecurity. They can create it in-house. They don't have to go land and expand or acquire it elsewhere. That's invaluable. Like you can't put a price tag on that. And that's why I think CrowdStrike deserved a bid. They were down 2% right at the open, but immediately had a 5% swing. And I also called out before the market, and I also posted yesterday on my Twitter yesterday afternoon. It's like SentinelOne will catch a bid off this and will be the biggest winner off this specific news. Why is that? They also in cloud security space, but they're trading at 8 times their ARR. 8 times. They don't have the same growth rate as a Wiz, but there's still a respectable amount of growth for the cloud security business. I think it's $100 million, their ARR, but still it's a decent growth and it's only trading at 8 times their ARR. It's like, all right, well, I'm not going to say they're going to be worth $200, SentinelOne, because that's the valuation. If you want to use Wiz's multiple, they're getting acquired, but theoretically they should catch a significant bid if rumors are that cybersecurity industry is going to consolidate, which we've been calling out for weeks, maybe even months, that's the specific industry in the post AI world that will see massive consolidation. And we're seeing it right now with Wiz in the private market, and SentinelOne will get acquired. But at this valuation right now, they're significantly undervalued if you use that Wiz multiple. So they will catch a bid. I bought into some 2025 leaps, $25 strikes on SentinelOne. Again, if you guys were part of my Discord group, I did call it out there. And I said that they're going to catch a bid. And they're up 7% today. And I think it's just starting. Where the reason that SentinelOne has been lagging against the other cybersecurity comps isn't because their tech is awful or their thesis is broken. They have a CrowdStrike problem where they have a similar growth rate as CrowdStrike, but CrowdStrike is producing 30% free cash flow margins, while SentinelOne just had their free cash flow positive quarter a month or two ago. So the question is, like, as an investor, why is SentinelOne not outgrowing CrowdStrike at the scale that they are able? Like, CrowdStrike is a large base. Like, they make 5 times as much as SentinelOne in the cloud security front. Why do they have a similar growth rate as SentinelOne? That shouldn't be the case. And they have twice the free cash flow margins that SentinelOne has. So, like, the biggest hurdle for SentinelOne was, all right, that's good, but it's not as good as CrowdStrike. I'd rather buy CrowdStrike. But now you're using SentinelOne as catching a bid is not a CrowdStrike problem. It's more an acquisition target. And as rumors start swirling, you're going to see M&A pick up significantly in the big tech space, primarily because I personally think the LLM race for big tech is close to being over. I'm not saying the AI theme is going to be broken, but I think that AI rush that you saw in an LLM space, it's going to start not phasing out, but consolidating, because we're at the 6 to 9 month mark on those AI related investments. If you're a CTO or part of that boardroom having that conversation, you're going to have the conversation of, like, what's the ROI on this CapEx investment in the AI space? Like, should we pause to maybe see how we can utilize LLMs in enterprise space, where right now there is a lag between how popular LLMs are for consumers, but it's not really hitting that popularity in the enterprise space yet. So I could see a pause of that and just going the acquisition route of, like, all right, let's fulfill our cloud security, or let's fulfill our suite of products by buying these tools to bring them in-house, like the GitLabs, the HashiCorps, SentinelOne's a great example. Like all these mid-cap software companies who are like not quite tier 1, but they're high quality tier 2. Let's go acquire them, bring them in-house, and make our full security portfolio, our full cloud service portfolio like significant, and just go that route. So I think that's why you're going to see names like GitLab, SentinelOne start probably catching bids because of that acquisition rumors that they're going to inevitably experience with this Wiz acquisition. So long-winded answer of saying this is a great thing from valuation perspective on cybersecurity. I think the large cap names won't catch a bid as much as the mid cap names, because the mid cap names are going to catch the bid based on acquisition rumors, where this is incredibly bullish for CrowdStrike because they create their cloud security platform or cloud security module in-house. That's having to spend $30 billion. And Palo Alto, it's another good thing, but issue with Palo Alto is the way they acquire these like innovate all these new modules with new tools that they have in their suite of products. They've went in and acquired it. They haven't really done a great job organically developing it. So that's like, if this is the price tag that Google had to make to acquire Wiz, Palo Alto is going to have to really spend in order to like keep up with the latest and greatest, because they haven't proven the ability to create these in-house products. I don't know if it's a lack of R&D spend or it's just absolutely difficult. CrowdStrike doesn't have the issues. So that's why I think it's very bullish for CrowdStrike, in my opinion. So I'll pause there. We can maybe show some charts. So like, what do you think about that, Austin? I just went on.
Well, tell them real quick. I mean, dude, these deep dives are like, this is your, to me, this is your pièce de résistance. Like, this is your monument. This is what you do best. I mean, it is, dude. Like, understanding truly what lies beneath the depths of the market to find those winners before anybody's even got it on their radar. Give the people, I just retweeted it, give the people a little insight of what you're going to be doing here, and feel free to drop that link.
Yeah, I mean, I put it in my posts right now, but yeah, so I have you guys probably can access a lot of my material on a lot of different platforms. I have a Savvy Trader. I go on Twitter and post. However, this is what I'm working with Austin on the coaching program, and the link I posted underneath my page on this specific live stream. This is the only area where you can get like actual Q&A, actual discussion, where like on Twitter and my Savvy Trader, I post my knowledge, and even on Discord, I post my knowledge, and that's it. On the link that I provided in my post, that's where you can actually learn. You can get like what I just called out for cybersecurity industry with the implications on like Google acquiring Wiz. That's not really any, like, you don't find that on Twitter. You don't find that me talking on Spaces. Like, it's more of a dialogue where like I tell you guys, and you guys answer me questions live, and like I'll respond right away. And like, I can teach you why this is bullish on CrowdStrike and SentinelOne. And you don't have to wait till after the market opens to see like, oh, is this bullish or bearish? Like, I'll let you know before the market opens, because I have that enterprise experience, and I can really digest a lot of like what the C-suite say a lot of time, because all I do is work with C-suite in my career. And I also can digest like what's BS and what's not, like what's actually a tailwind, what's actually a headwind. Like, for example, Google backed out of the acquisition for HubSpot, for example, like a week ago. Very speculative timing on like that rumor, like it's not going to happen. Then all of a sudden, Wiz getting acquired for $23 billion. I've been saying for like weeks, even months, that CRMs like HubSpot, even though HubSpot is a best of breed CRM, that specific realm of the new enterprise will be disrupted from AI. I don't know how many winners there will be. Maybe it's only Salesforce, maybe Monday.com and HubSpot. Those three are the only winners. But either way, there's going to be a disruption in their business model for CRMs. And I don't think the price tag of Google acquiring HubSpot is worth it in the long run, because it was a nosebleed valuation in a specific sector of the enterprise space that might be disrupted. Whereas cybersecurity, I've been saying it's the stickiest component of the IT budget. If you're a CTO, you will not cut costs on cybersecurity. It's the dumbest move you can make. And what's in cybersecurity is going to be a massive tailwind from AI, because the amount of data that's going to be generated from AI is going to be a stupid amount that no expert, even if they estimate right now, has any idea the ceiling on it, because we're so in the early innings of this thematic that who knows how much data is going to be generated from it. But I can promise you it's going to be a lot more than people assume right now. And what do you have to do with that data? You got to protect it. And that's why cybersecurity is going to be one of those highest, most quality secular growth themes for the rest of the decade. And I think these big dogs, the big tech companies like Google, for instance, are like, all right, I love HubSpot. I don't want to really invest that much capital into a CRM. Let's use that capital and pay up for a high quality cybersecurity name like Wiz, infuse it into our cloud security platform. And that's a stickier synergy than, I don't know, CRM and the data that a HubSpot would have. So like, I think this like conversion of like what the Google just did is going to be kind of the common theme going forward, where what's going to be a clear tailwind from AI and how do we get that into our in-house tool shed? So this kind of dialogue, that's the kind of content I'm talking about. Like I post this stuff on our Discord, and I also, this is the kind of conversation you would have in our live Q&A, which I would not offer anywhere else except for here. So I do think this is bullish for growth tech. I think that appetite for high beta is here right now. You're seeing a lot of the high quality growth names catch a bid. You're seeing cybersecurity names catch a bid. I don't think this is over. It's not just a blimp. I think this is here to stay, and it's going to be a pretty big rally.
I couldn't agree more. And I want to just call their attention to what that exclusive access gets you. Friday, we detailed for everyone. Here's our ranges on IWM. We put our top range at 218. let me just do a little zoom in there. What do you see right there? Yep. The crystal ball. Once again, look, you guys, like, here's the deal. It's not a crystal ball, but I look at it more as, what's that one thing? Tabula rasa, like the interpreter of all. It was like the one tablet that can give you access to everything. That's what we built for you, so that you don't have to, because it's going to take you 7 to 10 years to get to the foundational knowledge base that both him and I have gotten to, because it's the amount of time it takes to do it. We're giving you the access to the end result without the 7 to 10 years of time put into the game, which can be part of your time and thus get you there a lot quicker. That's the goal here. So I don't know if you want to, Karsten, Blake, any promotional codes. You know what? I'm feeling generous.
What?
I'm feeling generous. What am I gonna do? So you tell me right now. What's we're gonna talk. Why don't you give them just a quick, take 5 minutes? Let me go get this code wrapped up. I think it's worth talking a little Tesla for a minute, the robotaxi punt and all the other stuff. I think everyone would be interested to hear a second on that. If you got it in you, let me go get this code ripped up for you.
Yeah, absolutely. So Tesla, earlier today, Tesla absolutely filled that bid on that gap down the experience from the delay of the robotaxi event, or 8/8 to October. It went down 7 or 8%. It ticked back up the following day on Friday, and it followed through today with like up 4 or 5%, maybe even 6% today. Filled that gap until Elon confirmed that we are pushing out the robotaxi launch from 8/8 to, I'm assuming, October, because he didn't call out any specific dates. Only because of some slight design flaw that he saw that he wants to improve on. Again, if I'm a Tesla investor, this isn't like a trade. This is not a trade. I'm not trying to capitalize alpha in coming months. This is a lifetime opportunity. This is a generational buying opportunity, in my opinion. I could care less for trades in the months. I want years and years, like generational wealth. So if he needs 2 more months to perfect whatever review he wants to do in robotaxi, I'm all for it, because the biggest fail that you would want as a Tesla shareholder for this 8/8 event is a letdown, where like, oh, it's all hype. This robotaxi was like, we already had this information. There wasn't much knowledge of learning anything at that event. It was sell the news event, and we're just gonna be in that vicious cycle of just this massive basis building. You don't want that. You want there to be fireworks. You want there to be something revolutionary, eye-opening. And if Elon needs 2 more months of that, then okay, fine. Another reason it caught a bit today is because Elon's clearly, I don't want to get political, but like, he's clearly hoping, he's not validating, he's not sponsoring, he's whatever he is, he's pushing for Trump to win. Like, he's endorsing. He endorsed Trump over the weekend. So there is a Trump trade happening right now, or if you guys aren't aware of it, the Trump trade is, if he gets into office, which right now, the last time I checked was a 70% chance. So if he has in the bag, in my opinion. But if the Trump trade is bearish renewable energies, which you saw today, solar the whole solar sector got destroyed. For solar, Enphase, Solar Edge, Sem Inc., everything got way like 8% plus down today. Another one is China names, because historically he's been very tough on China in his presidency. So like that faded. So anything associated, not just like Alibaba, JD.com, PDD, it's anything associated in that region. Coupang, C Limited, both Southeast Asia, not really China, both fell in sympathy as well. So clearly a Trump trade is happening right now. And yet I've just called out the bearish side of a Trump trade. What's the bullish side? Crypto. Crypto is incredibly bullish for Trump. And especially with the new VP he announced, he is a big Bitcoin bull. So that's why you saw all the miners in crypto just rage over the weekend, because this is a big thing for if Trump winning is a big thing for the whole industry. So you're seeing that bullish crypto, bearish renewable energies in China. That is the Trump trade. And you also see DJT, which is like this Truth Social app. That went up 50+% pre-market. Don't invest in DJT, please. It's just a vehicle to capture this Trump trade. They don't make any money. Their fundamentals are a mess. It is not a Ponzi scheme, but it's just not a real business. So only trade that if you want to capitalize on this momentum of Trump winning, some kind of vehicle to capture that alpha, but not a real company in my opinion. But Tesla, you might ask, like, why is Tesla not going down the renewable energies? Because all the other EVs went down. Lucid Motors went down. Rivian went down. I called it out. He's a big time Trump endorsed. He endorsed Trump. So Trump winning is bullish for hyper specific bullish for Tesla. And again, that's a clear moat where Elon is just like has that Elon effect where it doesn't matter if the whole EV or renewable energy sector is down from this Trump winning. Like Tesla's a clear outlier where it won't affect them. And also, Tesla's energy storage business is on fire right now. They could care less for any of that specific plans that Biden has initiated on like benefits. If you go solar, like those incentive plans are nice, but it's not necessary for a company like Tesla, where like their demand for their energy storage business is like through the roof and clear outlier from all the other competitors. So that's an interesting trade. I do think there's some really interesting names from this pullback that I would be talking about more in the coaching space and like on Discord as well, where like I think there's one name I mentioned before maybe on here, but again, more depth with like in the future in these private spaces. There is one name that I'm really bullish on, even with this pullback. And I don't think Trump being elected will be bearish for this company because they're at a clear inflection point, and they're one of the few renewable energy plays that have a massive tailwind from the AI thematic.
And where can they get that pick?
What?
And where can they get that pick?
In the link that we just provided. And I can go in depth. Yeah. So Tesla, again, I think it's a win. It faded hard today because Elon confirmed the pushback day, but we're all long-term investors here. We own Tesla. We don't trade it. That's a key difference. So I think a lot of the Momo traders who got into Tesla recently, like, oh, we broke out that bearish wedge we've been in for quite some time. We broke out 88 event. Let's capitalize on that momentum entering the events. And all those traders went out the door, in my opinion. And now it's like the real investors and still healthy. Like we closed that 7% gap down pretty quickly. And it wasn't off of just noise. Like there's real fundamentals that we just got introduced like a couple weeks ago. The energy storage business is no joke. If that was a separate entity in a public company, like the multiple in that would be through the roof. And you don't have to pay up for that separately because I won't get into Tesla too much. We always talk about it, but it's just such a powerhouse that like you see the clear outlier against EVs and renewable energies all down 8+%. Tesla was up 6% at one point. That's a 14% delta between the competitive comps and Tesla. That's a insane amount. So yeah, I'll pass back to you to see what the Tesla chart looks, but I think it's healthy. We can probably consolidate here until their earnings in a couple weeks. Yeah, agreed. And either way, you guys, like that's kind of another reason why we're urging you, like, look, we do this every week and we're giving it out there so you can make money. I want you to make enough money that you can come spend a little bit of money. That's good business, in my opinion. Tesla, we gave it to you live, 145. It happened. We told you the top of this range is 267.
That's the take profit target, not just for us, but for most people in the market that are actively trading this. Now, again, as he mentioned, if you're long and strong, you're not fazed by this because at the end of the day, we barely sold that move off. Got 1, 2, 3 examples of huge bullish engulf here. I'm not concerned. Once we break 266 and change, I think we have significant upside. Remember, when we first put this in front of you, when it was trading at 145, we told you we are both trading for the minimum 193% upside long term, and it's happening. So if you missed it, it's not the first one. It's not the only one. We're going to keep banging these out for you just like we have the last 5-6 years. So I do have a quick question here because I did want to move on to talk snow really quick. I figured we do snow, NVIDIA, then smash or pass because this one is having a pretty damn good resurgence from our bottom. We haven't turned around yet. However, we did snipe this buying right here. I think we were adding 125, 126, 129. I added 128 and 130. I know you've been holding this one a while. We're basically all waiting for this retest of 307, which is their version to the golden mean, which is, I guess, this is kind of like what I consider to be my target one for anybody that's actively trading some of the position.
No, I think the reason the pullback in Snowflake is due to you guys remember that hack they had a couple weeks ago. We got more details on what got stolen. AT&T, a lot of AT&T data got stolen using Snowflake's data. Management has been very open about, like, again, this is not new information. This is just extra layer of detail from what was announced a couple weeks ago. But I do think that's a price actions, like that's a headwind on the price action, obviously, because it's a massive data breach. But management has confirmed that Snowflake wasn't breached. However, the login credentials weren't up to par of what it should be. So essentially, it was a customer login issue, not a data breach on whatever Snowflake's product is, if that makes sense. So essentially, it was like the stupid admin required, which they should have done. I can't believe they didn't have customer login credentials like at the top for all their customers, but they just didn't. But they fixed that right away. But it's really important to note this breach wasn't because of some vulnerability in the actual product. It was all login credentials. So essentially admin noise. They reiterated that customer relations are fine and they're not going to experience any financial impacts from this data breach. Okay. That's all you need to know. This was just a customer login credential issue, not a data breach on the product. Great. I wasn't worried because I know their product inside and out. Like, it's nearly impossible in my opinion. And this data that the AT&T just got, all these like millions of people that got breached, it was back from 2022 data, a 6-month period, and they bought the data back, $400,000 from the hackers. So essentially, nothing's going to get disrupted. Maybe it caused some anxiety from current customers, like, oh, why it got hacked? Like, I should be worried because all my data, like, again, 35% of the Fortune 2000 data is in Snowflake. They might, oh, I don't want to be the next one breached. Like, this is a huge headache issue. It wasn't a data breach. It was a customer login issue. There's a clear difference, and they fixed it, and they probably communicate that message to all the customers or clients, like those Fortune 2000 clients who went to them. They probably said the same thing, like, just a customer login credential issue. We fix it instantly on new update on software. Nothing about the product's vulnerable at all. You're fine. That's exactly what it is. We'll see. I've been very open. Like, it's oversold, probably balanced, but really it won't make that move towards 165 until the earnings report, which I'm very confident from all the channel checks I've read and analyst notes that it's business as usual and it's actually picking up even more than anticipated. So I think it's going to be, I really think it's going to be a mega cap company. I could be wrong. Fine. However, there's a high floor on the stock, in my opinion. The biggest worry on Snowflake is opportunity cost. It's not going to go to $50. It's not going to go to $80. It's just, it might stay here for a while until, I don't know, the go-to-market AI products become a reality and like you see an instant pickup in fundamentals based on that. We might have to wait for that, but we won't know that until the earnings report. So that's my 2 cents on Snowflake's data breach and what's happening in Snowflake.
Yeah, I think that, with any news like that, like there's there's the reaction, there's the news, there's the reaction to the news, then there's the fallout from the news. I feel like it's always kind of in that order, right? You get like short-term, medium-term, long-term effects. The goal is to obviously, take advantage of news that the market is overreacting to in the short term, but in the long term isn't really that big of a deal. And personally, I think this is that, especially if the issue's solved. I mean, there's a reason that these big tech boys hire basically black hat hackers to go in and rip their stuff apart. It's to find bugs, loopholes, etc. It's always the risk with any digital technology. Its exposure to risk is always going to be greater than analog, but it also allows for companies to scale at an unbelievable pace. And again, our future is digital and not literal, I think. Is maybe sad and dysphoric as that may be, the future of all things lies in this little box or this little tablet that you're holding in front of your face right now. We wouldn't be able to reach you if we didn't have it. So I think like really just being attuned to, and I got to give Shy credit for this because I have not done that level of research that he has, but kind of the beauty of what we're saying here, I know he's right because I've watched him do it time and time again. I know I can trust him. And so now I just get to get that quick hit access to it. And I don't have to spend 5 years looking at this. You know what I mean? It's like I can take what I can and leave the rest. And I think that's interesting. So to flip over to NVIDIA's here. Quick shout out, not going to go into it deep, but for those of you that were listening when we were talking about Unity, the buys came in 15, 16 bucks. You got a good entry. You're up 10%. Potential for reversal here. We really need to watch 18 bucks. It's kind of the next point of contention for buyers and sellers, but looking good so far. I'm going to clip us over to NVIDIA full screen here so we can dive into that. Then start getting your tickers ready for Smash or Pass. One per comment, so that way we can pull it up on the screen. Again, we look at the charts you want to look at and help give you some insight that will help you make a better decision on your trades. NVIDIA is playing right into our hand. I mean, exactly as anticipated. We called this 140 firm resistance. It hit, got rejected, but then picked back up long-term trend strength. This used to be resistance, and now it has become support. That is an incredibly bullish sign for any stock in the long term. This is the daily chart, meaning each one of these candles signifies 1 day of trading. So I think just the mere fact that we have turned what was resistance into support tells us that the sentiment is still bullish here. Now, a couple of things we want to see is we don't want to see this break support right here. We actually want to see this consolidate into this wedge before it breaks out and hits 170, 180, inevitably hitting 200. We are long on this one from like $40 a share after the split. So we're up a couple 100% here. In my retirement portfolio where I was adding this way down here, 15 bucks, I'm up like 1,000-something%. So again, that getting that exclusive access has its perks and privileges. Because you would have had that trade had you been in the club, in the elite, the inner circle, if you will. So NVIDIA is looking good, and I don't think we need to spend too much time on that because we have talked more about this than probably anything else. Let's just get into that smash or pass. You guys got the tickers. We got the brains. Let's put our heads together, get some analysis, and give you guys some commentary on what we're seeing with the stocks that you want to look at. Anything you got, drop it in the chat. All I ask is that you drop one at a time. Feel free to drop 10. Just put one per comment so that we can pop it up on the screen. I'm going to flip back here. Looks like we've already got a few. It is a cult, so that's what's awesome. So who cares? It's a cult that you win. But the good thing is you can leave. You just won't make as much money. So that's for you. Don't know what either of these are. I'm going to just go ahead and executive decision, pick one. Cormedics. That's a hell of some consolidation. I feel like this is. I'm thinking Transmedics. I'm thinking Cormedics. I feel like this is something. This is actually a great chart with a great base. $3. This might be small cap to look at. Wow, ran to 45 in 2015.
This is interesting.
It sounds like biotech, but the chart does not look biotech.
It's a medtech.
Medtech. There you go.
Primarily antibacterial and antifungal solution being developed for prevention of catheter-related bloodstream infections in patients. Let's see their fundamentals real quick.
Weirdly, this did not see a COVID pump. This is shocking.
It was pre-revenue. That's why they didn't make their first dollar till this year.
Still, anything antibacterial, antiviral, these are companies with nothing were booming 800%. So that's weird. It's good. I guess they did in 2021.
It's good. I'm trying to. It might be so early innings of this because I'm looking at their. I mean,
I'm
first
not
off, the
seeing a
chart
bunch
is
of
pacing.
dilution though, which is still shocking to me. Like there
What?
isn't 10 reverse splits, which in most biotechs is kind of the name of the game. But again, it's med tech, so I guess that's why.
Yeah, it's. I can't speak too much on what the product is, but on the chart, clear, there's a floor on the stock. It's 25% below. It's like a $4, $5 stock right now. So let's see CRMD. Let's see the chart on my thing. So you can read. Oh, perfect. On the weekly chart, you look at it on the 40 SMA, perfect bounce on there. So that held really well. It just cleared their 21. Wow. Yeah, I do a smash on this one. Especially with the volume. Like, whenever it hits the mid $3 range, there's heavy volume being bought up. So you have a floor on that stock. As thin volume above right now. So if it actually clears 550, this is a name that can just fly. It can double almost, it looks like.
I'm thinking there might be position trade opportunity here with entry about 4 entry here, stop below relative like local low, which would put you at like 420. Because it looks like below 420, you're going to $3. So you cut bait, but let's see. So that would be what? That would be like a 60 cent. That would be like a north of 10% stop, which isn't great. But the upside.
I mean, let's use an average VWAP from November 13th.
You want to pull that up? I don't have that shit on my chart.
Oh, you don't have yours? All right, let me see. Oh shit, I actually can't share mine right now. Let me that average VWAP is actually a great indicator. It's bounced multiple times, and that right now is at a 420, $4.20. So,
okay.
I would. That's a good stop loss, 420. But this is a smash for me. I think this goes higher.
Ooh. That's why I love doing this. I'm not gonna lie to you. I've like picks I would have never even looked at, and then they've submitted it on the stream, and then it ended up making me a ton of money.
I love it. I love it. All right, what's the next one?
Okay, we got that one. Here we go. Rocket companies.
It's a good vehicle to capture rate cuts.
It is, and the chart looks like it's already reflecting that.
I do like lending tree.
We had this range outlined. See, this is what sucks. Like it's like we do so much of this stuff. I don't have enough time to trade. I already had this $12 to 16 mapped out. I should have already owned this at $12. I don't. God damn it. Yeah, this is interesting. Buyers are coming in. Look at this RSI's consolidating delightfully. This one's looking a little bit prime time here, and we are expecting rate cuts. So I think this might be it. I think we might have to go options though here. I feel like that's the move.
All right, let me see the VWAP from IPO price. Ooh, okay. So it looks like it's going to break out from here. Heavy like resistance at 20. Heavy. There's a massive volume shelf that I don't know if it clears. First retest of that is at 1675. Then it is like thin volume between 1675 and 20. So like if it clears 1675, it's going to immediately be a magnet towards 20. I don't know unless we get 3 rate cuts this year. I don't know if it clears 20, but I do think at $20, I almost want to wait to see 1675 clears. And then once that clears there, $20 calls right away because it's going to be a magnet there. So,
I will say there are January, and this is not position I'm initiating in my stuff, just FYI, but just for shits and gigs, $60 on the $20 January of 25. So right here, October to, so this was $7. This is double in 2 months, which means this can have that kind of move. It's just 20 is going to be a point of contention. Porter, I think this might be a watch list one. I don't know. I'm too interested. Shit. All right, moving on. You're getting a wait and see. We'll look into that and we'll dive in a little bit more. This looks atrocious.
It's not a real company.
Yeah, I'm gonna tell you right now.
Let's see.
Hard pass. I can smell it from here. Yeah, no thanks.
It's a $75 million market cap. So
Yep,
like it's just a
pass.
penny stock.
All right, Karsten. VRT, Vertiv. This chart has boomed. Look at this thing. Jeez. Stocks Buddy says pass. Ooh, from a technical perspective. It's calling 94.80 resistance. And I mean, to be honest, this thing is absolutely like ripped. You're coming off of $11 in 2023 August. This thing has moved 1,000%.
Yeah, it looks like it's an electrical equipment company who just recently announced their hardware and software solutions to capitalize on AI data center revenues. I think that's why I caught a bid. Probably off that is my guess.
Yeah, I think it's had its run now. I think there's better opportunities.
Mm-hmm.
It's kind of it's a too hot to touch. Beyond Meat, the biggest failure at capitalization in a very hot market. It's terrible. I lived a vegetarian life for 4 or 5 years, just recently having broken it, and I will tell you, Beyond is the one fake meat I would not eat. Impossible for the win, dude.
Well, what's their moat? It's a commodity now.
Well, none now.
It's none.
They could have built that brand to be the pinnacle, but they just didn't. They didn't capitalize.
Yeah. They should have done partnerships with all fast food right away, stuff like that.
Immediately, dude. Immediately. Yeah. Impossible did it with Burger King, and Impossible brought me back to Burger King for the first time in years. And I went there like once every couple months. So it's like, it's simple. I don't know. But testing hasn't gone well. I know that because I follow that stuff. So that's going to be a hard pass. You'll be sitting on the toilet for a good 2 hours if you smash this one. Porter S. Rivian.
Oh, this is a technical dream right now. Rivian's breaking out for sure.
Oh, boy.
It is a big time. I think a lot of the fintech gurus love this chart right now. Sympathy play on Tesla, obviously. The VW, the Volkswagen deal with them is going to essentially give them an extra crutch during tough times. They maybe can pull that lever. Rate cut narrative play. It's breaking out. I think this is the big
25.
Yeah, I think this is going to
watch and wait.
Short-term trade though. I don't know about long-term.
Oh yeah, dude, you got room from here to $20 easy. But this is one that personally I would. So Stocks Buddy alerted this at $10 already. So you're up 70%. So if you don't have Stocks Buddy, then you've made a critical error in your judgment. Stocks Buddy's calculated the stop loss at $13.48, which I would agree with. That looks right to be bottom of range where we saw some consolidative touch there. But for me, if I wanted to go long and strong on one like this, if you're not in already, I'd want to see this $24, $25 mark get broken. Then you got an easy move to 40. Not to mention ridiculous liquidity up to the hundreds. So again, remember, IPO price was 100. It went to 180 and is now trading at $17. So keep that in mind. Now, granted, it was COVID pump, but still. Buyers are coming in. What's that volume? You got that volume shelf thing on your chart. What's that looking like right now?
Let me see. Pull it. All right, let's bring that volume shelf now from IPO, but a clear big one happened on July 2023. Then, wow, really then now. If it holds 16, it's going to fly, on volume. It's probably going to retest. Honestly, it might retest the first indicator is December 2023 high of $23. After that, it'll be at $27 from July 2023 highs. But right now, it's holding 1436, which is the 200-day moving average. So
I want to shoot myself right now. So somebody brought up this VRT. Porter just posted it, July of 2023. Let's find July of 2023. So right here, July of 2023. Oh my God, I smashed it. God damn it. Didn't buy it, smashed it. So this chart looks great. It was the cup and handle forming. I wanted to see a little bit of downside, and I smashed it. And I didn't even buy it, and it ran 500%. And someone with $1 million needs to just follow the stream, trade it all. Just send me $100,000 check at the end of the year. That's all I want. Your 1 million will become 10. Send me 100 grand. I would appreciate that at the very least. Shit. All right, we got Fubo here from Fergie.
Oh, not real. This is not a real company either.
You don't think the streaming is going to be explosive?
Not their business model, though.
I know. I tried it, and it was like getting tangled in wires and weeds just to watch one. I don't even remember what I was watching. It was like I was trying to watch one thing. It was like soccer. I don't know. I was trying to watch something. I did a free trial. It was a nightmare. I had to get on the phone to cancel it.
Listen, as soon as Amazon and Netflix got to live sports, that was the final nail in the coffin for Fubo.
Yep. So, unfortunately, Fubo, goodbye. Death, a painful death at the hands of Jeffy.
Oh, these Celsius. All right. I actually made
interesting price action here. Looks terrible right now.
Yeah. I made some. If you go on the weekly chart, I did make a post about this earlier. Key levels to watch, obviously $50. That's a massive volume shelf. It's defending that level.
Well, I got to ask you this, Mr. Moat. Why do you love this one?
It's a Gen Z and
but this is like the antithesis of you.
No, I drink it. I love it. It tastes great. I met the John CEO multiple times.
Okay.
Their international story is just getting started.
So it must be so good. You like it that much that you will go. Yeah, okay. I got to respect
no,
it.
It's the best among all the energy drinks.
Okay.
Like Monster trash, Red Bull's trash. Their like once they got in that deal with Pepsi, as you guys are aware, like a year and a half ago, I was like, that's an inflection point because they had huge issues with their D&D. They just couldn't get into enough stores. Pepsi solved that. Now there is obviously a demand issue on consumer goods, energy drinks included. And Celsius' market share has gone up from 11% like a month ago to now like 10. It's the first like retrace of significant amounts. So now there's like worries like, oh, like is this the best it's gonna get? Maybe. I very openly I've gone to Celsius in the teens. I started this position like years ago. I sold 50% at $90. I have proof of it on my page. I was open about it. I got hate for it. I was like, you've been in the teens. Celsius is raging. Why would you sell below when it's about to hit $100? I was like, I think the days of Celsius being a growth story is over. It's not about top. It's not going to be any more hyper growth of 50+%. It's more going to be on earnings growth. And because of that, there's going to be new investors that are going to be caught off guard and they're going to liquidate the position. And there's going to be a weird switch from growth to value. And I think Celsius might be in that gray area of like, oh, that transition is happening where they're going to be growing 30% this year, slowly going to 20%, but they're going to hold that 20% for quite some time. But the valuation didn't make sense anymore if I believe in that thesis. And we're seeing that right now. But the international story is just getting started. So I'm not saying like the thesis is over. I think domestically, we've hit our points. Now it's all about international growth. And John, the CEO, is like extremely hesitant when I talk to him. Like he does not want this to be associated with alcohol at all or nightlife. So I thought that was like, oh, that's an interesting domestic play maybe of like going the nightlife route, entertainment. He doesn't want that. So that's an absolute 86. Like that's not going to happen at all. So it's all international growth story. It's got a cool off a bit. Valuation is still not there. I still think it's a little overvalued, but $50 is a clear bottom for the stock. If we break 50, there's an average from the May 2022 bottom. There is an average VWAP at $48, $49, and their 200 weekly EMA is at $36. I don't think we'll get there, but I think there's gonna be a lot of buyers once $50 hits. It's gonna probably bounce. So I actually am looking into, if we do retest the $50 range, I am looking into buying some $60 strikes probably, because I do think we'll get significant bounce. For my long-term position, because I still own, even though I trimmed a significant amount in the mid 80s and 90s, like I still own 100 shares because I love the product, nostalgia. It was like really my first big multi-bagger. I'm depending on the earnings report, like this might be one I just pocket and just like, it's not the growth story anymore. It's not the inflection point happen. If in the earnings this cycle we see like minimal international growth, it's gonna go down. It's gonna go down pretty significantly, because right now they're in that stage 4 component of the chart breakdown, and there is no floor on like that stage 4. Like doesn't matter how cheap the valuation is, because cheap can always get cheaper. And for a consumer goods stock, like this shouldn't have the same multiple as a software name, but right now it kind of does. So that's why it's like, it's going to be re-rated to consumer product. If it does, and the earnings disappoints, this could go mid 30s.
Yeah, I agree. You got a nice base at 27, but I think that's about as good as the pain gets. It's either 36 holds or 27 as your lifeline, and I think that's a long road down from here. So let's get on to it, my man Black Mamba. One of your
do not take profits on Palantir. I'm telling you, this is a generational opportunity. Maybe at this range, like $29 at the current fundamentals, like it's pricey. But there's so few pure AI plays in the market right now. Palantir is one of them. And all right, I'm gonna give you couple of sentences for free, because usually I'm gonna provide this kind of knowledge in our private room, but people don't realize this yet. Palantir is gonna be the biggest winner in the LLM space, large language model space. You're seeing all these big tech companies just have its arms raised towards LLMs, and you're seeing like them spend a ton of AI related investments to capture that. OpenAI is the first mover, but like LLMs will be commoditized in probably less than a year. It's gonna be as normalized as telehealth is, or as Impossible Meat and Beyond Meat is. Like it's gonna be commoditized. But people aren't realizing, what do you do once LLMs become a normalized product? What then? There's only one solution if you're an organization to actually utilize your LLMs to do actionable insights. It's Palantir's ontology program. A lot of people aren't talking about this, but their ontology is the only way you can get the semantic layer on the LLMs. Where, all right, let me talk less techie. Using the raw resources from the LLMs, you can use the text, the images, all that to give you actionable insight to what to do with all that information. The only layer that you're able to do that with is the ontology. So essentially, ontology is the last piece you need on all these LLMs to actually make it actionable insights for enterprises. Because right now, enterprises aren't using LLMs really. They're using bots, like agents, AI agents. But like as right now, I think we're at that point where LLMs are just like not really doing it for the enterprises, because they're not realizing how ontology, Palantir's semantic layer on top of the LLMs, is absolutely necessary in order to make these LLMs actually valuable for the organization. They're going to soon realize that, but I think the disconnect on Palantir has always been, why isn't the commercial revenue not being bumped up significantly from that commercial client count increasing 70% year over year? It's because they use this white canvas approach where, fine, all these boot camps are succeeding, these commercial clients are increasing, but there is a lag between adoption and actual implementation, because that white canvas approach, like you adopt Palantir's technology, AIP platform, but it's up to you and us to personalize it for your organization. And that process takes months, 3 to 6 months minimum. So I think right now we're at an inflection point in Palantir last year with this AIP. You're seeing with the commercial client growth. I think the next stage of this LLM's race will be that semantic layer. And there's no other company who can provide that than Palantir. And as soon as that gets like acknowledged or introduced in their earnings, I think this name runs hard, because right now it's a $40 billion company. Let me pull it up. Right now, it's a $60 billion company. And you're saying that the only way these LLMs are actually useful, that everyone's spending like hundreds of billions of dollars worth, is if you use the ontology layer that Palantir provides. This company that being worth 50 billion and this hundreds of billion dollars of LLMs arms race, it's going to go up significantly. Like, it's a dumb amount. And that's why it's like, it's weird talking about it, because like it's a 50 to 60 billion dollar company. But like, I'm saying that's, out of all the companies I own or in that range, they have the clearest path of being a mega cap. I just have to see first in the fundamentals, but in the product, I know it enough. I've watched enough boot camps. I've studied it. I see the application, the Enterprise 2.0, and their only competition. There's no competitors with them. So I think this is going to be an NVIDIA situation where it runs up because they're not a gaming chip company. They're going to be the new kings of the digital economy. As soon as that realization happens for Palantir, it's going to run up. It's not going to look back. So I would hold.
It is. And guess what? For those of you watching, you knew that a long time ago. The gift has been given. You knew. You should have been loading this name up back in March of 2023. If you weren't, then you're just looking in the wrong place. But fear not. Father shall provide. We shall provide you with everything you need. These are deep in the money. This is where I get torn, though, of like, I kind of want to just exercise them. You know what I mean? Like I did with NVIDIA. It's like, I want to own this. I really want to own this.
If you have the capital there, then for sure. I mean, it's a lifelong buy for me.
Yeah, I'm gonna figure that out, because this one is I have maybe 600-700 shares right now, but this is one that like I'm with you that like if and when should this hit, you're looking at $100 stock. It's like it's not like a what do we do? How far will it go? I think NVIDIA is like a great case study to then look at next to a name like this personally, where the growth is just going to be so like ethereal. Like no one's going to like, it's so applicable everywhere. And it already has the notoriety socially that it's just going to be psychotic. You know what I mean? Like NVIDIA had every piece laid out for it. All it needed to do was perform on a fundamental basis. That's it. It had to just meet optimal performance. It exceeded that, obviously, with that first earnings that started the whole chain reaction. But it already had all the hype, all of the social prowess. It had everything necessary to become an explosive. Like, I don't mean to use the word meme stock in an offensive way, but we're also living in a time in which meme attachment does affect market cap. As psychotic as that is.
Yeah,
it does. Because we account for what, 45% of the market? I mean, retail focused, right? It's about 45% of the market, supposedly. So, of course, it's going to have an impact because those are things that we couldn't predict before. And so, looking at this, we talk about that golden mean reversion at $30. That was our long-term, that was like our first take profit target from when we were buying this at $7 and $8. So, what that means, though, is like, should we see explosive growth? Scale this out, okay? Scale this out to understand here. Should we see explosive growth from a technical standpoint? You've got $70 in the wings, which is another 3x from here, just about. And from our original position, that's 10x. So,
and that it would be a $200 billion company at that valuation too.
Kind of makes sense. You got to find the place where the fundamentals and the technicals all align, and there you have found your happy place wherein you will make more money than any asshole that's just buying the indexes or paying an advisor 30% of their lifetime profits, mind you. That 2 to 3% adds up over time, guys. Think about a mortgage at 2 to 3%. Let's look at it that way, right? So I bought my house at a 2.7%. That was my mortgage rate, right? All-time lows, scooped at the bottom. Very proud of that. Locked as much money into a house as I could. Had I now bought that same house at 6% interest, I am going to inevitably pay twice as much money for that same house. So now think about this from this standpoint. If you are, and I'm not I'm not advocating against having someone manage your money. Some, but there's a reason my advisor doesn't have all my money. Think about it. 3% over 30 years, which I would argue is about lifetime in the market, 30, 40 years. If on a mortgage, 3%, you're paying a couple $100,000 in interest, right? But you're also holding the property value. Think about a portfolio value. Even if your portfolio doesn't change, they collect net 3%. So again, I think the mortgage example is what really opened a good friend of mine. I was talking about this, what opened his eyes that, oh my God, 3% seems like nothing, or say 2%. I would say most advisors are between 1% and 2%. You're still paying about, if you do okay and you have a market expectation return, you're going to hand them about 30% of what you're getting. For doing what? For reading a Morningstar report and buying you 4 mutual funds?
I'm telling you, and also information has never been so accessible for the retail. Like before, maybe like 15 years ago, fine, make the argument. But like now,
Right.
like Austin and I are doing this twice a week. You get more alpha from what we're communicating than, I don't know, you paying some Joe Schmo like that.
It's so dumb.
It's insane.
And we're getting the same institutional quality research that they're looking at. So same, it's not that they have access to tools that we don't. Those are accessible now. You just now have an interpreter, 2 of them, few of them, that are also, I would argue, a little more. Our job isn't to sell ourselves to get more money under management. It's to grow our money and show you what we're doing so that you grow your money. So think about that from an incentive basis, right? I'm not out there selling all the time. I'm doing the research for my own money. That's what blew my mind about advisors. They're spending most of their time selling their management, and they are spending very little time actually researching the market. They're like, pop a Wall Street Journal and a coffee on a Sunday, and that's where they're getting all of their market insights. All of them.
They're parrots. I worked in iBanking. I'm telling you, like they just like, they hear something, repeat it. They're literally just parrots, and like there's no like intellectual layer of what they're communicating. There's few out there. I'm not gonna say all,
but the majority.
Advisors. Yeah.
Dude, case in point, I'm at the gym and I'm like going to my locker, getting my stuff ready, right? And I hear a guy talking. He runs, I know him now that he works in an Edward Jones. He runs an Edward Jones office. Okay. So he runs an Edward Jones office, which is basically just like it's like a franchise, right? Where you can manage money. And here's what I heard that was really funny. Because I heard this guy, they were watching, because at the gym, they have this little screen up, they'll have CNBC up or whatever, and I hear these 2 older guys talking like, man, I wish I'd have bought some of that NVIDIA. Like, I didn't know anything about that. This digital world's crazy. I wish I'd have bought some of that. And they're talking about buying it now. And like, so I just kind of chirped in and I was like, give it a minute, let it breathe. Like, you might get 100, 120, but yeah, I have a lot of it long term. Just kind of said that in passing. And it's Edward Jones guy talking to these guys. And then he says, I don't know. You're better off just getting broad exposure. He's kind of trying to put him off. Here's why. That was the guy managing those people's money who walked into the gym while they're watching NVIDIA 10X. And they're kind of asking the guy like, hey, how come we didn't get any of these? Oh, you had the exposure. You had the exposure. We had some good S&P. We had some good S&P Invesco funds. We had some really good, we got some of that exposure. And they're like, no, but why don't you tell us, like, now that we know, like, oh, everybody uses these chips. Wow, they make a lot of money selling or managing, and obviously being a provider of the data, insights, analytics, cloud infrastructure. They're like, why wouldn't we have just bought some of that too? Like, just some of the stock. Like, I get it. You do mostly funds, but why didn't we get any of the stock, And the guy, dude, he froze up. And he's like, well, look, no, come on. I mean, look, every time that stock was running, like, nobody knew, blah, blah. And I'm just sitting in my head thinking of all the updates we did on exactly why. Not, hey, maybe it'll go, but hey, here's a fundamental and technical basis to look at this through a lens, right, of why it's going to go. Mm-hmm. And it's like, it just goes to show, to exactly your point, that like they didn't do any of the work.
They lack the philosophical angle of stories of stocks. They see binary 1-0. Like, for example, your friend who handled your money, or a specific part of your money, like Jumia, he instantly wrote it off. He's like, no institutional support. Like, okay, that's lazy. Read on what the company's done the past year, how it's a different company. Do some research, like just an hour of like R&D, like research. You'll realize like, oh, it's interesting angle. Or maybe you don't, but just don't write it off because the herd isn't covering it. Like a lot of these financial advisors, they're sheep. That's the issue. And they're just going to give you sheep-like returns. But if you want to be like an alpha or a king, you kind of have to like have those risky bets that nobody else is seeing. In order to do that, you need to have that philosophical approach on the fundamentals and then get backed up on the technicals. And that's where you get the multi-bagger alpha. So that's, I think it's a new age of how to be an investor where these financial advisors are living in the 20th century. We're trying to give you the edge in the 21st century. And that's a clear difference.
It is a clear difference. Here's one that I bucked the trend, right? So Netflix is a good example, right? They've been talking for years. We need to figure out a way to stop these people from stealing our, stealing our subscription access. We knew they would inevitably crack it. Everyone knew. They post one bad earnings, and this stock sells off from 600 down to 169 bucks. Anyone with a brain knew that 170 to 200, that's a discount, which is why we posted it that we were buying the breakout over 200. It is now up 658, right where it was, now double topping. I'm not saying this is it, but again, 300% upside that was missed because, again, as Shai pointed out, they were too. I don't even know if it's lazy. It is lazy. It's more ignorance, I feel like, than anything else. It's an unwillingness to learn or explore or anything. Just so you guys know, that's all we do. Like, we'll be texting each other shit on the weekends. Like, look at this. Like, this is all we do. So when you look at stuff like this, the goal is to train you and train your ability to research these things, not have you be like a goldfish that just eats every time we drop you a piece of food. I want you to understand, like he said, I never thought that was a great way to put it. The philosophical angle, which is extremely relevant in this day and age, or maybe it's just to our generation. Maybe that's what it is. That like we care about the story as much as we care about how much money they make and what the growth trajectory looks like. Like, because our generation, we know, cares more about good management than anyone else, meaning ethical management. And it's like why our generation will respond to like sexual harassment claims. Like, yeah, I don't love that, but I'll dump a company. If I find out the CEO has been a creepy scumbag, it kind of gives me insight into like he's not running his company very well.
Well, we asked the question, but why always? Previous generations, I think this like took, okay, that's what it is. We asked like, all right, we pushed back a little more of like, why is this so special? Why is this different than other stocks? Why is this company different against their peers? Stuff like that. It works. Like the Netflix is a great example. Meta is another great example.
Meta perfect example.
Tripled again. The list goes on. There's going to be, that's the beauty of the market. There's always a stock like a Meta, a Netflix, a Palantir, a CrowdStrike. There's probably one right now that I haven't found. And that's the beauty of like, that's what fuels me on like doing this R&D and like looking for these companies. Even though I have 20 stocks, I'm still looking because I know there's one company out there that is going to be the next Jumia that is a 3-bagger within 6 months. It's just how the market's set up to be. So I think that's what fuels me and drives me. And that's what's so exciting. Like you just never know. And even right now, like as we're talking about past winners, like in 6 months, we're going to call like, wow, a Snowflake in the 130s. Like, if we knew, like it's at $300 now.
Yeah. And then there will be people coming on going, well, what's the next one? It's like, well, wait, you were here. I remember seeing your name for the last one. And for you guys, it's just a matter of like, where are you going to put your faith? Look, here's very simply, and I'll shut up and we'll get out of here. Trust is a choice. Faith implies trust. That means do your due diligence, make a decision to trust, test the result. This is all just simple scientific process. You try it, it works, me likey, me do again. You try it, it doesn't work, me no likey, me no do again. But not quitting. I've always told you guys that. Don't quit before the miracle happens. So like,
survive to trade another day.
Rick, appreciate you, man. I'm glad you're here. 66.
Woo.
Smart ones. The smart ones. See, now he's going to be able to sit down with all his friends. They're going to look like idiots. And he's going to have that alpha. Bada bang. Yeah, he's already got 2 names that are absolute bangers.
Yeah.
That his kids and then grandkids are going to be like, Daddy, Pappy, thank you for buying that Palantir. I'm going to sell 1 share. It's worth like $8,000 now. And he's got 600 shares. Never walk away from the one that might buy you a house. But again, it's never over allocate and go crazy. When I got into Palantir, I put like 6% of what I had in that portfolio, a sizable chunk. But if Palantir goes to zero, I'm not out of a job. That's the point. I get enough exposure that I can capitalize without putting so much exposure that I need the win. If you trade from need, from want, you will never make it. You trade from a foundation of research and understanding and
trust. That's a great point. That Jumia is only a 2% position for me. Like, I'm not going to risk
would have been nice
position on thesis. It would have been nice, but like, I'm living to trade another day because I don't want to be busted out or like tilted. Being
You're
tilted
going to have a 10x return though. So again, such a small part of your portfolio can have an outsized return, even in the scope of the whole portfolio. If you got say you got a $5,000 position, right, on a 100K portfolio, it's 5%, and that position runs 1,000%. Do the math, man. I did very well this year, but I would be a liar if I didn't state that NVIDIA accounted for a significant portion of those gains, and it wasn't even a big position. It was a 10% position that I would say accounts for about 30% of my return over the last year. So think about that. A 10% position equated 30% of my overall return. Like, dude, that's what it is. I'm trying to look at what it is actually, so I can tell you exactly. Year to date.
I gotta hop off there right now.
All right, yeah, me too. But we'll wrap up. I love y'all. Stay blessed now. Wrap up with this year to date. Now I'm gonna prove it. I don't want to bullshit you. So I'll just pop this on there and then you can see it. So this is live and it's updating. So you know that we're not full of shit. We're showing you what we're doing with our money. So I'm up 94% year to date, right? And I would say NVIDIA is about 30% of that. So the whole thing's up 94%. NVIDIA is, I would give it, say 30% of that. One good pick can make your year. I mean, I'd still be up substantially, but nevertheless, you get the point. So again, nothing we're talking about isn't shit that we're doing because transparency is everything. So love y'all. Stay blessed now. Bye-bye.